So this on December, 1st December, first day of December 2022. And yesterday night, the Fed chair, Mr. Powell, gave a speech, and the market is just reacting to the news today morning. This is the 4-hour candle of the Dow Jones Industrial Average. So the stock market is rising. Yes. So this is the stock market. And when the stock market is rising, the dollar falls for obviously because investors are dumping the dollar for stocks. So the investors who are dumping the dollar for stocks, if we want to know who these investors are, if these are the long-term investors or are they the short-term investors? And the short-term investors, we can talk of 3 month to 2 year, and the long-term investor, you can talk of them from periods of 10 year to 30 year. And when we want to know which investors are these who are dumping the dollar to buy the stocks, are they the long term or are they the short term? Now that's when we go and look at the bonds, the bond yields. Yes. And when we look at the 3 month, US government bond yields, they are rising. No, meaning these investors who are the short-term investors, they are dumping the dollar. The money is moving out of the bonds into the stocks. Yes, and this is the weekly chart. What about the 2 year? Yeah, yeah, 2 year still it's 4.3. It's very high. What about the 10 year? No, the 10 year investors, they are buying the dollar. Yes, because the bond yields are falling. Now, when the money is moving into the bonds, the yields fall. When the money is out of the bonds, the yields rise. So for the 10 year bond yields, you can see that they are falling, meaning that these long-term investors, they are buying the dollar. What about the 30 year? Same case to the 30 year bond yields, they are falling. So back to the stock market. This move that we've been seeing, this bullish move, these investors who are taking on these more risk to buy the stocks, these are the short-term investors, the same investors who are buying, who are dumping, who are selling the dollar on the short term, on the 3 month and the 2 year bonds. But for the long term, the long term investors, they are buying the dollar. So if we want to see a genuine bull market that will last, supported by masses of buying volume and momentum. Now we have to look long term. You know, now these long term investors, when the long term yields now start giving more returns than the short term yields, and the stock market is rising at that time. Now we can say that's a genuine move. But this one is just short term. So I think what we are looking for here in the stock market is maybe to tag the previous highs around the 36, 37,000 for the low. So these stocks, yes, they are rising. You know, that means that the investors are taking more risk. But who are these investors? They are the short-term investors. Yes. If we look at NAS 100, it's not really, it does not have so much bullish momentum like the Dow, which makes me even believe even more that this is just a correction. It might be even tagging this previous high here before before now we move into a recession, and then now when the long term yields, when the long term bonds have higher yields than short term yields, now we can start having a genuine bull market. But if you look at gold, you see gold is rising, yes, and gold, it's a hedge against inflation. The stocks are rising, but when you look at oil, it's not been rising that much. And I remember I posted my analysis on oil a few days ago. Let me just so for the oil, this oil, we were anticipating it to rise from it's almost up from 74 to 80. It's almost 600 pips from where we entered. So this idea was posted on 27 November, the day before yesterday, when oil was at 74. And it's at $80 per barrel. It's almost 600 pips up. Same case to the UK oil analysis, which was published. No, it was around 78. Now it's $73 per barrel. Yeah, so you can say it's been rising. It's been rising this week. You can see there's a weekly candle. But now, if the stocks are rising, if gold is rising, then why is oil not rising? If you could answer that question for me in the section, I'll be glad to interact. So the Fed remarks they want to reduce the rate of increase. They are not actually cutting the rates, and they hinted that they will stagnate at some point, just to to drive in inflation into the economy. And when they are saying that they are expecting to reduce the rate of hike. When we look at the 3 month yield, the chart which I sent, which is here. So at around 5.1, 5.3, 5.5. So this may be the next stop for the short term yields. And if it's the next stop for the short term yields, then most likely that's where the interest rates will pause for some time before maybe they start cutting. You know, and since we posted this idea, the rates they were at around 4.1, now they are 4.3, meaning that we still have some way to go. So for the oil, if Fed is really trying to fight inflation, and yet oil is at low levels, if we really want, if we really expecting to have this move up, And when the price of oil goes up, it comes with inflation. So the inflation that the Fed is experiencing right now, you cannot even compare it with the inflation that is about to come, you know, because oil will be at record highs, gold will have maybe reached $2,000 per ounce. The stock market, the Dow, will be at the top. You know, the interest rates, they will be at around 5.5. That is if they not start cutting. So most likely we'll be headed for a recession. Most likely, and you can see gold is really pushing up for the last 1, 2, 3, 4, 5 weeks. But funny thing, for the oil, it's at the bottom. So if at all this oil uh, does break out to the top, then uh, we might be headed for a recession. And many people have been coming out and saying that now the Fed need to come out and you know start cutting the rates. It's been too late. It's been too late. So the closing question is, if the stocks are rising and if gold is rising and if the DXY is falling, why is oil not rising? Why is oil not rising? So I think we might be headed for a bull market for the oil, and let's wait for the breakout. Let's wait for the breakout. Yes. Also, when I look at the DXY, especially at the 4 hour, you can see it's at the support. Yeah. So it's at the support at the 4 hour. But when you look at the USD Japanese yen, it's broken out. It's almost the same as structure, but for the pair, for the US dollar Japanese yen, it's broken out. For the US card, still not broken out. For the USD CHF, still not broken out. So I don't know what it is with the yen, but one thing that I can tell you for sure is that when oil starts to tick higher, when oil starts to rise, the yen will be under very massive pressure because uh, you know oil. The Japanese they import all their oil, and when inflation goes up with the current inflation in Japan already at high levels, if now oil is going to be more expensive and driving more inflation, the yen is really going to be under pressure. So I don't know what it is with this pair. It's broken out, and yet no other pair has broken out for the dollar. So I think only time will tell. The DXY, I think it's at the support. Only time will tell. But for the Fed, for the short term, we still. I think my the point that I say the Fed reducing the rates or maintaining the rates, it's at 4.8, 5.5, because that's where the short term yields might find the next resistance or stop.